Hello and welcome to BQ Prime. I'm Hiral Tadia. Joining us on the show today is Sumit Pokharna, VP of Fundamental Research at Kotak Securities, to discuss as to what one should be doing with the IT space on the back of the BFSI exposure that the companies could be having to US as well as Europe. Sumit, good morning and welcome to the show.
Very good morning to you.
Sumit, my first question coming to you is, firstly, let's take it from the top, right? I mean, we started off the entire conversation earlier during the last couple of weeks as well, in terms of the smaller banks that started to see a collapse and the mid-cap IT names that would be having exposure to them. And now we've actually moved on from there to say as to which are the bigger banks that are collapsing and what's the impact it could have on the larger IT majors. Overall, how big a risk is this for the Indian IT industry as a whole?
We believe that as of now, definitely this is a big problem. It's a global problem, and this is happening in client-centric regions of these Indian IT companies, particularly US, and there is a problem in Europe also. In fact, the problem is continuing from last 1 year because of the war and other scenarios. So inflation was also a big headwind for the IT in terms of spent by its clients. So we believe right now with bank scenario happening globally, there is a possibility of cut in discretionary spending, which will impact all Indian IT companies because we get a derived demand from there. So we have to pinpoint and find out companies which has got lower exposure to BFS, that is banking and financial services, which will have lower impact for those companies like HCL Tech or Tech Mahindra has got the lowest exposure to BFS. So they are going to be relatively better off as compared to others.
Right. So overall, what I want to understand from you, Sumit, is one is two key things. You're saying that the concerns have been ongoing for the last 1 year, and the major aspect that we need to understand over here is the discretionary tech spends that will be curtailed, right? So, basis all of this, is this going to be firstly a near-term impact, or do you think it's going to be like a longer-term impact coming in from, the entire of FY24?
So as of now, if you will see that IT spending has become as a must. If you want to excel in your business, IT is required. But unfortunately, because of the global macro headwinds, there may be immediate short-term, concerns for the sector itself. Because as of now, we are assuming that the problem of BFSI or BFS will remain curtailed to here. But if it is spreads to say real estate or other sectors like mortgages and other, then the problem can escalate furthermore for IT sector. And we have seen that inflation is still remain at elevated levels. So that is not yet out of picture. So what Fed will take, how that scenario pans out, it all depends on it. If the recession is a shallow one or is a mild one, then definitely we will all Indian IT companies will come out very strong out of this. But if it turns out to be deeper and longer, then there is a problem for Indian IT companies. Now, the beauty about Indian IT companies will be that we will be focusing more on cost takeouts, deals, and other things. So, more problem in US means they may look for more outsourcing to reduce their operating cost. And that will throw a lot of opportunities for Indian IT companies in the medium to long term. But short term, there will be a bigger problem out here. And in fact, Indian companies will benefit with vendor consolidation also.
Right. So, Sumit, let me understand one thing. Now, basis all of these concerns that we're talking about, in which quarter are we expected to see an impact coming in? Because clearly, whatever deal wins, etc., which we've seen already, the trajectory in for the first half of FY24 is something which has already been set by the company, right?
Right.
So, when do we see the actual impact?
So we expect that Q4 or this quarter itself, some impact will be visible, and that will make a base lower for Q1 and next year. We might see some uptick out there, but it will. We are still not out of woods. So we need to see how that pans out, and eventually Q2 will also remain moderate only. So
Hmm.
next, this quarter plus next 2 quarter can be a pain point for the sector.
Right. So, in terms of growth, how much downtick are you expecting if you have to see on a sequential basis for the fourth quarter of FY23 as well as for the first half of FY24?
So if you look at that, because of this problem, we were anticipating earlier. We were anticipating a growth of 8%.
Hmm.
But because of this turmoil, global banking issues, we expect 1 to 2% will be hit. Revenue hit will be seen in the top tier one IT companies. So that will again result in lower profitability based on how much they can curtail and all that. But coming to your question, we believe earlier we were anticipating around 8% growth, but because of this turmoil, we expect a 1 to 2% hit in the immediate near future.
Right. Now, if we have to talk company specific as well, let's divide this into two buckets, large caps as well as mid caps. From the large cap IT space, taking the BFSI exposure into consideration and the other points that we discussed right now as well, where are you seeing higher impact where there is no scope of insulation?
If you just because the Indian IT companies don't give revenue bifurcation just to the exposure to the banking and financial services, they give for
Right.
BFSI, including the insurance part. But based on our understanding, the exposure to BFS sector uh, uh, is the highest in case of TCS, which is
Hmm.
almost around 29%, then followed by Wipro, which is almost 27%, then Infosys, which will be around 26%. So higher the exposure to these BFS segment, and depending on how strong you are there, the impact will be seen going forward. The lowest, as I mentioned, will be Tech Mahindra and HCL Tech. HCL Tech is just 14% and Tech Mahindra is just 12%. So the impact of a global meltdown can be seen lower, particularly to these two companies, but will be higher in case of TCS, Wipro, Infosys, Cognizant.
Right. And if you talk about the mid cap IT players, how are you seeing that? Because clearly, it's the mid cap IT probably are the ones which do have a larger exposure in terms of regional banks as clients.
So what we believe is that definitely the hit will be big depending on which company we are talking about in the mid cap space. But
Hmm.
investors should be given the concerns going from last 1 year, which I mentioned earlier also. We have been guiding our investors to focus more on the large cap IT companies because they can handle this situation far more stronger as compared to the mid cap companies. And one can even look at, say, for example, the exposure for emphasis, which to North America, it's almost as high as 82%. So as
Hmm.
we know, inflation, Fed, and then now the banking crisis. So that will impact these mid-cap IT companies a lot more, which has got a higher exposure to US or particularly North America.
Right. And apart from this, I was just reading another report which was clearly indicating specifically from an HCL Tech with a roadshow that they had that they have no exposure to regional banks in the US with 99% of its BFSI revenues coming in from large banks and insurance companies, right? And
Right.
they're expecting the outlook for BFSI to be strong in the next few quarters, and that will be led by a ramp up of couple of recently closed large deals. Now, taking this commentary into consideration from an HCL Tech, how are you viewing it?
See, in the tier one IT companies, we have been very bullish on Infosys and HCL Tech. That remains our top pick. We
Hmm.
have been guiding investors that these two companies will be able to handle the situation far boldly and firmly, and they have seen a lot of such type of turmoils in the past also. They have come out very well. So investors should look for capital protection at this point in time, and valuations for the mid cap IT companies have still not been very attractive that one can jump and buy with both hands, and
Hmm.
we recommend to wait for some more time to see a price correction and or time correction at least, and then we will take a look at it. So far, HCL Tech is concerned, as you have mentioned, we have been bullish on the company, and they are expected to do well.
Right. And apart from this, if you see the spending on cost takeouts, are you expecting a pickup to come in on that one?
As I mentioned, that the USP for large cap IT companies, particularly Infosys, which has got very good track record of cost takeouts and all that, we believe these Indian IT companies will be able to get a bigger pie of it. Uh, just to highlight one or two data points that will give you a clear picture
Hmm.
about it. In terms of the global outsourcing of IT work, India gets almost 50-55% of the work, which is phenomenal.
Right.
And Infosys is being a leader in terms of growth and other things, including TCS is also doing well. So we believe that all cost takeouts opportunities, Indian IT companies will be in a far better position who has got full stack of services available to them and good past track record to capture this. But do we expect immediate benefit coming out of it? We don't think so. It will take 1 or 2 more quarters before we'll see those fruits coming to them.
Right. So, which are the companies do you think which are better placed from this aspect?
As I mentioned, TCS and Infosys will be better placed. And Infosys, we have seen in the past also, they have done really good in terms of cost takeout and other deals.
Right. So now, Sumit, we have Q1, Q4 earnings, which will be announced soon as well, right? Now,
Yes.
taking and the key is going to be the commentary as well as the guidance we hear, because the expectation in the third quarter was that, we will see some bit of weakness in commentary. That didn't happen. The performance was above what the street was estimating as well. What, according to you, should be the key monitorables from here on for the IT space?
According to me, given the attrition rate has fallen and the supply side issues are behind us, so far manpower are concerned, uh, the margin will not be that an issue. What will be the bigger issue will be the top line growth.
Hmm.
Uh, so investors should focus on guidance on the how the uh, mm, top line growth there looks like and what will be the management commentary comes on that front. Margin, I think, will be by and large stable only for large cap IT companies. So, and the deal pipeline, these two, three things. And most important is the employee layoffs,
Hmm.
employee addition or employee layoff, whatever you can call. So that will be another data point which will give you future demand outlook from these IT companies.
Right. And from a valuation perspective currently, would you recommend any buying opportunities at current levels from a longer term perspective?
Yeah, we have been time and again telling investors that whenever you see crisis or there is a blood on the street, that is the best time to buy quality stocks at a reasonable valuation. Otherwise, you always end up paying a very expensive valuation when everything goes good. Uh, Buy when it's cheap. That's the philosophy we follow. And right now, the valuations have
Hmm.
corrected for most of the IT companies. So we believe that one can look for Infosys, HCL Tech from a longer term perspective. However, mid cap IT companies, as I mentioned, the valuation is still have got a lot of cushion to correct. Once those Q4 numbers are out and we will see the commentary out there, then we can see some further correction out there. So focus on large cap IT companies, which has got far more experience in handling such
Hmm.
situations.
Right. And my last question coming to you is overall, between the winners and the losers in 24, do you think we could see further polarization that could happen? Number one. And number two, is there a possibility of a further tone down in terms of commentary that can be expected as well?
We do not rule down a possibility of further uh, guidance, mid, mediocre guidance coming from the management of these companies because the outlook is very dull out there because you don't
Hmm.
know how many more banks can go, what will the Fed will do. As the story pan out and things will clear, we will see that there is some pain point in the consolidation which is happening among banks. Some IT spending cut might be there, definitely, discretionary IT spending. And particularly, if you look at IT engineering space, because of this recession thing, if it becomes a very sticky thing in nature, then we will see a lot of cut in spending on the in that particular space. So that is why we have been negative on, say, LTTS or KPIT for that matter.
Right. Thank you so much, Sumit, for joining us on the show and giving us those views as well overall in terms of what could be in store for the IT companies, and probably a good time to start bottom picking as well in terms of IT companies that Sumit has been mentioning from a longer term perspective. Thank you. Stay safe and speak to you soon again.
Thank you very much. Thank you.